Hey, what's up, YouTube? Welcome to my YouTube channel. And how are you guys doing? So, today I just want to quickly show you guys some things on the chat. Okay, so this is volatility 25 index of the dairy synthetic indices. So, I'll be analyzing today's price action and also using this video to educate myself in terms of the processes, okay, what I look for before I engage price, right? So I always have two rules that I use, okay, when it comes to making decision in the market, all right? So one of my rules is that for me to have a continuation or look for continuation trade, continuation trades, there must be there must be a break of structure before the start of the session. Okay, so be it London session, New York session, Asian session, so there must be a break of structure before the start of that particular session. So this is a clean chart. Okay, there's no markings on it now. So you can see that we have this here, right? So that will be my focus, right? That will be my focus. And I like what I see in the range of this particular candle, which happens to be yesterday's candle. So that is very nice to see, right? So I'll just mark out today's price action here. So this is today's price action. I'll change the color. I've made it invincible. Make it darker. Yeah. So this vertical line separates today's price action from yesterday's price action. Okay. So what do we have here, right? What do we have here? What did price do before today? Okay. This is how we know the story. This is how we tell what we would want to see and what we are expecting from price, okay, on any given day that we want to trade. Okay, so I trade single candles, meaning that I trade the current candle of a particular day using the previous candle. Okay, I don't know if that makes sense to you. So first thing first, what do I see on this price action? So I can see that we have this low here, right? We have that low. Where's my magnets? Okay, good. So we have this low right here. This low was swept by yesterday's price action, as you can see. So yesterday's price action swept this low, and we find ourselves in this sort of range, right? So for 25 index, we swept this low and then we are having this particular range. I'm hoping to see 25 index come to take out this high. Okay, because this is the high that I feel the price is impulsively going to, right? Then if we take out this high, we can see if we'll be able to fill up all of this impulsive push to the downside. Okay, maybe we'll feel 50% of it, right? So my eyes are on this level here, just in between this fair value gap. So you never can tell, who knows? we could have this, or we could have something like this where we see price push, right, and then, or we have price push up, or we have price push up to the side. So whatever the market wants to do, all right, we'll just follow what it's doing, right? What it's doing. Well, right now, currently, we've seen this low swept, right? So we've seen this low swept, right? So we've seen this low swept, and this is the high that led to this low. Okay, so if this high led to this low and this low is swept, so we should be able to come back to take this high away, right? So this is what I saw for Anna fully went into today's price action. So to do that, I have to measure the range of yesterday's price action or yesterday's candle. So I have this as my range, right? I have this as my range, just like this. So you can see that we have the opening price here, and then we came down to the 50% of this entire yesterday's range, right? So we did not just move out like that, because there's something we saw here, which when we go to a lower time frame, we'll be able to see why price came into the 50% and then moved away. Okay, just like that, right? So this is our range, this high and this low, and this is another block, right? This is a support zone, right? So I think one I'll do justice to these levels. Yes, did. So this is our range. I have our high here, then our low here, right? So if we look at structure before the start of the New York session, which brings me back to my rule, I feel like this particular price, should I say, this index, okay, is copying gold, right? It's really copying gold because gold has a similar movement just like this, okay, on Friday, right? Gold has similar movement just like this on Friday. Let me show you guys. So now this is gold, right? We had the range of the previous day and then the Friday price action. You can see the same pattern before the New York session. We had that break. So it's moving somewhat like gold. Okay, it's moving like gold, which is fine, which is completely fine. And I think I'll be comparing this 25 index to gold and observing how it moves. Okay, it has a very strong similarities with gold price action. Okay, so like we all know, synthetic market is like a copy of the real life market. I think this particular index copies the gold market, okay, the gold commodity market. Okay, so we had this obvious reason to say that, okay, we are going to be bullish because we had this impulsive candle. Okay, we had this impulsive candle here, had another impulsive candle here. So even if we had swept this high, right, before the start of that session, I think we even had that self. So we would have still sold and then still buy at the same time, right? So this is start of the session. This is my 2 a.m. candle. So this is the start of the session. I don't think I got the time right. Oh, I didn't get that time right. So let's convert our time to New York time zone. Right. So 2 a.m. give us that retracement here. So this retracement, we would have still got this retracement because it fits into the rules of a reversal, right? The rules of a reversal. But overall, we can see that the market structure is bullish, right? Market structure is bullish because we have this buy or this break of structure here, right? So we had the whole of this gap to fill, which after taking this high meets with the reversal rule that before the start of the New York session, there must be a sweep, right, of the previous day's high or low, depending on the direction we are looking at. So for this case, we have this high swept, right, and then the New York session, sorry, the London session started, and we cannot dispute the fact that we cannot say that we did not see this fair value gap, right? You can't say that we did not see this fair value gap, right? So we can't say that we didn't see this. Okay, so let's give this wonderful cell setup. And not only that, we had the mathematical play here, right? Where we have this low to this high right here, giving us a 20 pips, right? 20 pips, we call it pips. So giving us this 20 pips right here. So this 20 pips now, if we do our calculations, we have um 20 divided by 20,000 divided by 2600. Okay, 20,000 divided by 2600. We have 7, right? 7 pips. So we can just quickly do this. Take it there and count our 7 pips. So we have 7 pips here. Yeah, 7 pips here. So which key zone is closer to this? We have this fair value gap. So it was so obvious that we would have caught this sell. Now, when we say we catch this sell, to what point, right? To what point? To at least the fill, right, of this fair value and to this open close, right? Because these are key zones, these are key areas, these are key areas. I did not take this because I wasn't on the chart, but when I came into the chart, I saw a more clearer price action, which enabled me to take a buy from here. I think that came from 15-minute time frame. All right, so we had that sell-off from here, pushed down to this, swept this low to something here. Okay, something there. And how do we know that the price was going to reverse from this point here, right? I will still apply the same mathematical play here. I'll still apply the same mathematical play there because now we have this low, right? And then we had this break of this low. So most people will see it as a break of structure for market to continue to the downside, because we all understood that we are coming from, like, in the morning we're having push to the upside and the rest. So we cannot say that the market is going to be bearish, right? You can say, judging from this low that was swept, right? So there are more reasons to look for buys than to look for sells. So we had a mathematical play. I think I took a buy here but got stopped out at this point. So I just had to, like, relax, and then I saw that mathematical play again, where we had this high, down to this low, which gave us 8.6 8.6 thousand divided by 600. It gave us 3 pips down. So we have a 3 pips down from this low. Pips down from this low. I think 3 pips down right there. Okay, 3 pips down. So ask yourself, what is below this? You see this fair value gap, but you not come to it. So ask yourself, what is below this 3 pips that we could use to get a push to the upside? So you have to go lower to investigate, right? You go lower to investigate. So what do we have here? So we look at the whole of this. There's this particular entry system that I discovered for myself because of how it plays out. So I have taken note of it, and I will be applying it from now henceforth, because it's more calm and it will reduce my loss, right? To reduce my loss. So we have that play here where we had this high, right? So this is a high, right? So this particular candle is the candle that broke this high. You get, this particular candle broke this high. So from here down to this push, this, okay, let me push it to line chart, right? This now is our support. Okay, you can see that this is a V-shaped level, right? See how the V-shaped level just aligns to the T of these 3 pips on this mathematical, I don't know what to call it, play, right? That mathematical play. So we have 3 aligning with this V shape. This will be our liquidity, and this is our break of structure. So everything was just giving me reasons to take a buy, reasons to take a buy. So you can see that we have that tap right there. So this candle broke this high, as you can see from the body. Then the liquidity for this push is this particular candle, because it did not come down to mitigate this V-shaped level. Okay, that have been the perfect entry, right? So this serve as the liquidity right there. So this is the new entry technique that I'll be using now henceforth. Using this entry technique where we have a break, right? We just look out for candles like this. Okay, I'll spot it out again. It's something that is always common in the market. So I'll spot it out here for you to see. So you see we have the mathematical play aligning with this V-shaped level, give us our first entry right here. Okay, then our stop loss will just be this low. Okay, just be this low. Then we can target the high or the shift back to the high of that first the candle range. Target is high or push higher. Right. Remember from our first check we had this as our target point. Yeah. So this is like it's as if we are over exaggerating the take profit, but actually that is where price is coming to, right? That is where price is coming to because we have the whole of this as liquidity to be swept. Price is going to come to that zone, right? Price is going to come to that zone. So that is the first entry. Let me walk you through the second entry. So if you are looking for a more should I say a more reserved confirmation entry, you can repeat the same process here in this particular price action here, right? So it played out perfectly here, where we have this high. This is a break of structure, right? Liquidity first pullback. These are first pullback, right? Or this could be our pullbacks, right? But these pullbacks did not even come to this A-shaped level. We use the Malaysian S&R, see A-shaped level. So Malaysian S&R will tell us exactly where we should find those sweet entries, right? So we had that, and this is our liquidity. The first pullback right there is our liquidity, and then our second entry would have come from this point here, right? Then stop loss here, all right, right, all right. So let's see if we can have a third entry. Okay, for our third entry, we're still going to repeat the same process. You see, this could be it. I think I saw that particular entry. I missed this one, this particular entry here, because it did not meet this pullback did not get to this A-shaped level, right? So I missed it. I missed that particular one. Okay, so let me see if I can think 3 minutes. Okay, this 3 minutes. 1 minute. Okay. This is it, right? This is it. On the 1 minute, we had this high swept, high swept, uh, A-shaped level right there. Break of structure. So this one had like, yeah, there was liquidity. There was liquidity. Now the question here is, why didn't I take here? Okay, why didn't I take here instead of here? Now, if you look at, this is the A-shaped level, right? On the line chart, this is our A-shaped level, right? At least even if I want to take, I won't take up to this extent because this particular zone, this would have been my zone, but I took this because the liquidity is closer to this open, right? So this would have been like the third entry here. So this liquidity was closer to the A-shaped zone. Okay, so my entry would have been here, then stop loss around this particular candle low here, right? So this is like the entry technique that I will be using from now henceforth, because I notice it plays out a lot. So it's going to give you that opportunity to, add positions upon positions upon position. Okay, and it reduces the stop loss because makes you have a shorter stop loss and a higher take profit, as you can see. So $91. If you get to that point, that will be $91. If you're using the smallest, the second to lowest lot size, I think. So this will give you $96 and this will give you $100. So total should be close to like $300 or so. As if you can hold it. That if you can hold it. So the mathematical formula combined with ICT. I didn't even show more of ICT on this particular setup. Just MSNR, Malaysian support and resistance, was the play here, right? Was the play here. So we only had that fair value gap that led to the push to the downside, right? But now this, should I say, this now is a manipulation leg, because we had, remember the rule before. Yes, we could take this, right? We could take this, but it is better to trade alongside the trend than just trading sessions, right? So it's something that I am trying to develop, right? I'm trying to develop trading trends than sessions, because I'm I have my strategy I built focused on sessions. So if immediately we have a session begin, I'll, look for the nearest POI and then trade that particular session. So I want to now focus on trends, understanding market structure, and then so I'll be able to navigate through, using that particular system that I have adjusted to. So with this particular type of trading style, I think you will be catching bigger risks to reward and massive moves too. Okay, so you need to just understand higher time frame, bigger picture, and then on that you know what to do. So yeah, I don't know if I should upload this particular video to the internet because you carry plenty sauce and juicy things. Most of the things that you've never heard about. So especially when it comes to this mathematical play here on 25 index, this is something you will never hear, right? No strategy has ever provided a synthetic market where you use division to get exact reversal points in the market. You can never get it anywhere, right? So I have brought it and proven it to you on the chart here, right? So that'll be all for this video. Um, I'll see you guys some other time, and I think I'll still drop more comments on this particular trade setup. That's more talks. I'll see you guys in the next video. Please subscribe. We're almost hitting 80 subscribers. And for my videos, this period, I think my videos have been doing well compared to last year and previous videos I've uploaded. This one I've been doing very well. I see 100 views, 100 plus views in my videos, and I'm so grateful for that. Please keep supporting the boy. I am not selling any course, okay, but I don't think I'll do that in the future. But I can mentor, I can teach you one on one. I can also post my free videos like this for you. Okay, all right. See you guys next time. Stay safe.